Hi, Thursday, August 25th, 2016. Monaco 64 here, home of alternative economics and contrarian views. I'd like to talk about the Federal Reserve, Janet Yellen, and the Jackson Hole speech that's coming out tomorrow. I saw a headline in the FT the other day saying that gold is losing its shine because the Fed now is expected to start raising interest rates. Then they might do it in September this year, and that Yellen might announce that tomorrow at Jackson Hole, Wyoming. So I'd like to talk about that today and the concept of the Federal Reserve being behind the curve. And what does that mean? Well, basically that means that the Federal Reserve is lost control of the market. A lot of people think that the Federal Reserve can keep rates wherever they want, short-term rates at least, and they can to some extent. But sometimes the markets actually lead the Federal Reserve. We've seen with LIBOR, 3-month LIBOR spiking higher now. It's, I think, around 80 basis points. And, around $28 trillion of loans are based on LIBOR rates, according to an article by Zero Hedge a few weeks ago. I know that LIBOR is not as important as it used to be. Apparently the banks in London don't really use LIBOR as much, but it's indicating that, short-term rates are going higher. And that's the market, that's not the Fed. The Fed's still stuck at 25 basis points to 50 basis points or thereabouts. So, yeah, that's the concept of the Fed being behind the curve. It's when the market starts moving and then the Fed has to react. And so, yeah, there's a lot of talk now, interest rates, a Fed raising interest rates is going to be bad for gold. But let's look at the facts. Back in December 2016, when the Fed hiked interest rates, you can see in the chart here, gold was trading around 1,060. The next day, on December 17th, it dropped to 1,047.70. That was the low on that day, and but it was still above the December 3rd low, which was around 1,046.45. So basically a double bottom there. And ever since then, when the Fed raised the Fed funds rate by 25 basis points, gold has been going only one way, and that's higher. So it's pretty strange that people still have this misconception that the Fed raising interest rates and higher rates are going to be negative for gold. They could, if the Fed were really aggressive and made the move, didn't let the market tell them to do. If the Fed raised interest rates, by 1%, and surprised the markets, and then the next meeting is hiked by another 1%, yes, then, the Fed would probably kill the bull market in gold. And of that, I'm not even sure. Another chart I want to show you, even though back then, I don't think that the Federal Reserve targeted Fed funds rate, but have a look at this chart. This is the Fed funds rate all the way from 1954 to the present day, basically. And as you can see in the bull market in the 70s in gold, if you look at in early 70s, Fed funds drop below 4%. And they had a spike higher in the mid 70s. They dropped down, and then they went all the way up to almost 20% in 1981 or so, 1980, 1981. And that was when we had the bull market in gold. And the reason, gold went up with interest rates going up is that the Fed was always behind the curve. And inflation was always, in control. The Fed didn't have control of inflation. So that's why gold went up. And it's one of the reasons why also, the US had to leave close the gold window in the early 70s, because they didn't want to raise rates to protect, the value of, that peg at $35. So as you can see, and then in the 80s, since the early 80s, Fed funds has been going down on the trend. If anything, gold dropped from 887. I think that was the high in 1980, January 1980. And it dropped all the way down to 250 in the late 1990s. I know Fed funds have continued to go down since then, but I would say that there's just as good a chance of gold going up now if Fed funds rates start going up and interest rates start going up. And the other point I'd like to make is about the stock market as well. And whether, the Federal Reserve is going to make a mistake. Because if you look in last year now, when the Fed raised rates on December 16th, 2015 by, 25 basis points, the Dow was at 17,731. You can see by this chart. And on that day, that's where the Dow closed when they raised rates. And then almost slightly more than a month later, on January 20th, the Dow had dropped 15,450. So over 2,000 points, or 12.35%. So that was the result of the Fed raising rates by 25 basis points. So as you can see now, we're at quite elevated level in the Dow, all-time highs. So if the Fed does decide again to raise rates on September 21st, it will be very interesting to see if that's a mistake or not. The other thing that leads me to believe that the Fed is behind the curve is that you had a speech by Bill Dudley of the New York Fed a few weeks ago in Bali. And he said that the Fed is better off waiting, being too late raising rates than being too early raising rates. So that shows to me that they're going to be behind the curve. And what you could see is actually quite ugly. You could get a bond market coming off. You could see some price pressures, inflationary pressures coming on. And maybe that's what gold is trying to point out to investors, that the Fed is behind the curve. I know bond yields have gone down a lot, but things can turn very quickly. And if the Fed is behind the curve, the markets are going to jump on that. So yeah, that's what I wanted to talk about. You can see the last time they hiked rates in December, ever since then, gold has been one way, higher. Stock market has been a bit more mixed. We're up since then, but right after it, it dropped quite a bit, and the Fed had to take the foot, put the foot down, put the pedal down, and tell the market it wasn't going to raise rates and everything. But now it's back on. So I wouldn't be surprised if they make a mistake. They are behind the curve. So that's it for now. And we'll see what Janet Yellen says tomorrow. Yeah, I'll talk to you later. If you enjoyed this video, please like, share, and subscribe. We also take donations. There's a few links below in the description. You can donate in Bitcoin via PayPal or Patreon. Bye-bye.